Please join me in welcoming to the stage Her Excellency Dalia Khorshid, the Group CEO and Managing Director of Beltone Holding. Please. Amal Dokhan, Managing Partner at 500 Global MENA. And last but not least, Huda Al-Lawati, the founder and CEO of Aliph Capital. Thank you. Come through. Wonderful to have you all with us, because together you do bring unparalleled expertise and insights into the evolving world of investments and entrepreneurship. And we want to find out what truly drives successful investment decisions and strategies to unlock funding opportunities and how businesses can align with the dynamic needs of this flourishing region. So, Your Excellency, I would love to start with you first of all. In terms of when you're evaluating a company's readiness for investment, what are you looking for? What are those key indicators that you're looking for? And also, what are some of the ones that may be less obvious or overlooked?
Okay, thank you. First of all, good morning, everyone. Thank you very much for inviting us today. It's an honor and it's a pleasure. Thank you for having us in this inspiring panel. With respect to investment, whether you're a strategic investor or a financial investor, a majority investor or a minority investor, there are key traits that are very important that have to go hand in hand. It's both on the qualitative and the quantitative underlying fundamentals. Because sometimes there are very good ideas and they are very good investments from a concept perspective, but they don't have the ability of making money. So it's not important that the company is ready for investment, that it's making money, but it needs to have the ability to make money. And it's very important also that we look at, is it scalable? Because it's very important, because either you're a strategic, as I said, or financial. In both situations, you need to be able to have sustainable growth for a business to be qualified from an investor perspective. So these are very important underlying fundamentals that we always look at. And overall, all of this has to be cultivated with the right team and the drive behind this business. Because management is key, and management can take the right decisions in maintaining and the right decisions in stopping certain actions. So these are very important traits that we look at them, and it's very important that we ensure that all of them are looked at with special weights in order for us to be able to see how we are going to be managing it. So these are key factors that we look at when we look at whether a company is ready for investment or not.
Of course, and you know, when you say it's the team, do you find that people often have a great idea, but they forget to hire well and forget to have that team? Because at the end of the day, you're also balancing for risk and reward as well.
Exactly. Now, I've looked at investment from different angles. I was first an investment banker, so I was serving investors, advising investors, starting with being the investment banking head for Citigroup, so I was looking at it from that perspective. Then I moved to corporate, so I sat on the other side of the table, growing and getting into investments in all around the emerging markets, then into Europe and the US. Then I moved to a policymaker, and I became the Minister of Investment. And then I became back again into investment banking, but also into an investment head, managing investments in the region. So at every different stage of my career, there has always been a decision. And decision-making is a very important trait in the management team. decision-making in getting the right people around you, decision-making in how you're going to manage it, decision-making in being disruptive, decision-making in understanding what decisions to take at the right time, how to stop certain things. Some people can't take the decision to stop, and it gets them into a deep dive, when sometimes there is a huge opportunity for you to recultivate your business, take new decisions, and then get into an inflection point again. So this is the balance between how you look at balancing your risk against your reward. And every stage of an investment is a risk. An investment, by virtue of it being an investment, is a risk decision that you take. But you just need to go very simple and very basic. How much of that risk is valuable compared to how much am I going to be rewarded on? And as long as the formula is balanced and the formula is, on an overall perspective, making you money, because there are so many instances that you are not making money but will make money. So it's a risk decision that you're taking for a time frame. And whether you're staying for a short period, whether you're staying on the medium term, whether you're staying on the long term, you need to be able to have that calculated risk.
And so, Amal, speaking to that, what do you see entrepreneurs in terms of the kind of mistakes that they make when they're trying to approach VCs? What are those mistakes that they make, and how can they avoid them?
I think it's an important question that sometimes we don't want to say mistakes, especially if they're doing it for the first time, Sally. And maybe it's good to highlight also that I come from an early stage investment lens, which is pre-seed and seed, which is different than when you look at it from a growth perspective, Series A and B, and I think, Huda will definitely speak a lot on that. So when we're looking at early stage investors, I would say you'll be shocked that the first thing that I see could be a mistake is over-focusing on the investor and giving your full attention to that rather than going and really getting customers. You know what attracts? It's the other way around. It's like if you're over-focusing on fundraising, investors, what do they want, you're kind of like dismissing that the end user is your money maker, it is your validation, it is the one that's going to get the investors to come to you and say, I want to see what you're doing, why are you attracting, that many customers? And that's your strength and your muscle, right?
So I think
reshift. Yeah. There's a shift that needs to happen at the early stage, and that's why when we work with founders, we tell them at the beginning, let's get the experiments. Let's instill the experimentation, the lean, kind of thinking. Who are the early ones? You don't have technology. You don't have to have technology at the beginning, right? Technology is a mean and a tool, right? VCs want technologies to scale, but if you're able to test it with an Excel sheet, you're able to test it with a WhatsApp, you're able to test it on any mean, then this is great, right? So I think the first thing is like over-focusing on the VC. The second thing, over-focusing on building the tech, while you're not actually doing enough time with the customers again. And the point is, we always ask, how much time are you spending to attract new customers versus how much time are you spending on building your tech? Early days, right? So the balance should be leaning toward understanding consumers. The second thing is really understand whom are you fundraising from? Well, it's the other way. The investor is sort of a customer. You're trying to please them, understand their minds, how they think, where do they come from, what did they do. Her background was, there's a bit of government, there's a bit of that. You have to speak the language of the investor. You have to know where they come from. And there's a bit of psychology in it, and I think this is over-dismissed again by the founders, that there's a lot of emotions involved in the formula of decision-making. Whether you want to admit it or not, or whether we as VCs want to admit it or not, There's that first time I sit with you, am I comfortable working with you? Are we clicking on any points? Are we able to talk? Are you able to listen to me and I listen to you? There's so many values that we need to align on at the very beginning that a lot of people always say it's almost like a relationship or actually a marriage proposal, right? You know, are we going to do it? And sometimes you see a great company, but you can't work with the founder. And that's a big issue, and it's a red flag. So as you mentioned, the founders, sometimes they say it's a cliche to say the founders is the biggest thing we look for. No, it's not. It is the core, because market changes, technology changes, economical shifts happen, but the founders are the ones that are going to bounce back and bring a new product and bring a new thing. So keep that in mind when you're fundraising. So you see a lot of it is instilling, you know, kind of mindsets when you're sitting with the investor. And maybe a technical advice, you know, around also some of the mistakes. I think sometimes it's so random. They go and talk to any investor and to all the investors, and they reach out to everybody. And like, not everyone invests in your sector, in your stage, in your country, and the list goes on, right? So do the homework at the beginning of understanding, what do they invest in? Do you fit the thesis? Every investor has a thesis, and just to simplify it, it's the agreement we have with our investors. We also have LPs that gave us money to invest in certain ways. You have to know what we invest in. And you know who is the best, actually, person to tell you about an investor? What is the best diligence? Any thoughts? With whom? With the founder, right? Go ask the founders they invested in. How were they? How's the process? How long does it take? You know, how much is the ticket? And all of these stuff. Rather than coming to the meeting and wasting 20 minutes asking basic questions you should have gotten, you know, from another place. So prep is also important. And maybe I'll close with something that I saw some of the most successful founders have done at an early stage, which is design your round. How do I design my round? All of the things that I mentioned, right? Who are the first liners I'm going to actually go and target? Because they have either synergies, they have the background, I could fit with the company they are working with, so I could be a consumer, I could be a collaborator. Think of all of these intricacies. It's a map. Draw that map. And really try to find, where should I go? That will be your first liner. You didn't get a response, go to the second one. And I know this is so much tactics, but at the very beginning, use the help of the other founders to help you design that. But we have a founder who talked to 600 with that methodology, over 600 investors, over a period of 4 months, and they got to close the round after that with most of the ones they spoke to at the very beginning. It just took time. Why do I go to the second liners? Because not everyone who told you, I commit or I'm interested, will definitely convert. You have to protect your company, your interest, take the second liners, but really be ready for that. You know, and you see there's a lot of mental kind of prep in that. And that's why we always say, hopefully you have a co-founder, somebody still focused on the business, and somebody is fundraising. So divide responsibilities. But at the end of the day, we really hope that the table is equal between an investor and a founder. But believe it or not, sometimes it's not even for us. I sat on tables where I had to convince the founder to enable me and allow me to get into that deal because it was such a hot deal. They are oversubscribed, and they have so much money. So I think understand the dynamic. Where do you stand? How much leverage do you have? When to actually push, you know, for the valuation and all of these stuff at the beginning, and when to pull back to close.
It's so interesting. It's kind of like a matchmaking thing, isn't it? You know, the way you talk about it, and it's like, you got to know the other side, you got to know how they think and what they do. It's true. You know, I was listening to Reid Hoffman talk about the founder of LinkedIn, multi-billionaire now because of LinkedIn and obviously so many other companies, but he said the same thing. He gets approached all the time to invest. And sometimes he knows that business is going to make so much money, but he will say no because he doesn't like the kind of person who's heading it up. So it's like this relationship that you're going into. It's incredible to think about that. Huda, I'd love to bring you in on the conversation as well. In terms of thinking about the different rounds that we can bring in investors to the business, the factors that entrepreneurs should be prioritizing, speaking to Amal's point, in terms of selecting the right investor for sustainable growth.
So firstly, thank you. Thanks Forbes Middle East for doing this and for having me here. I've been investing in emerging markets for 20 years, and the landscape has changed so much. Today, almost every conversation in the region especially tends to be very VC-oriented. I'm in private equity. We invest at later stages, we invest at growth stage, regardless of business is digital native or not. And I think because it's such a nascent area, people do this, the VC founders that come to me to raise money is ridiculous. It's like, a few times a day. And I'm like, you just need to open my website or see anything I said to know that I'm not a VC investor, I'm a private equity investor. And that really puts me, to Amal's point, in a negative frame of mind where I'm like, well, you didn't even do the research to figure out if I'm the right investor for you or not. So I think there's a lot of homework and prep that's important when it comes to how to approach investors, but then going to your point of how to select investors for sustainable growth. We talk a lot about sustainable growth because we invest in the mid-market business. These are businesses that have, 80, 100 million riyals of revenue, they're profitable. They tend to have a key man or key woman risk because it's a founder who's driving them. And they've gotten to this point of whether it's 100 million riyals of revenue, 200 people, but that stage at which it's not scalable anymore. They need to build up teams, they need to invest in talent, technology, infrastructure. And that's where I've had a lot of experience in terms of value add. I really appreciate people who come to me for that and who talk up to me about the fact that they need to build their backend, or they need to improve their supply chain, or they need to improve their ERPs, or they want to know how to get into Saudi, or whatever aspect of growth it is. It's being very clear on what it takes for you to go from mid-market to a growing and long-lasting business, because in this sector there are hundreds and thousands of businesses that either plateau or start declining because they don't know how to take that next step. So I think you need to be clear as a founder or business owner, management team, that what is my ambition? First of all, obviously, what is my target market potential? Then what is my ambition, and what are the missing pieces for me to get there? I'm loath to see founders who come and tell me that, oh, we just need money, right? And this does happen. To your point on rejecting good deals, I've dealt, and one particular comes to mind, founders who are invested in very good businesses, growing businesses, and I actually would say that they might do very well, but I'm not going to invest with them because their focus is not value creation. Their focus is not investors, and I don't mean investors instead of prioritizing, but bringing them into the remit as stakeholders. Some founders look at investors as partnering with me and becoming part of the stakeholder group, and others look at them as financiers. And that's important because when things go south, who do you solve for? You need to solve for all your stakeholders, from your investor to your T-boy. Honestly, if you're a good founder, you're solving for everyone when things go wrong. That personality trait is very important. I don't care if they're going to grow, but if they don't have that trait, they don't have that focus, they don't have the ability to understand that their dollar is just as important as my dollar, just as important as the dollar that the employee is waiting for, I'm not interested. They also have to be realistic, right? I mean, you can't have, if you have a business that says that, well, I am going to continue doing exactly what I do with the management team that I have or with the technology that I have, and I'm going to become a billion-dollar business. That's usually not true. And that's where we go back to sustainable growth, because you can grow by, at a very early stage in the VC space, you grow by doing a lot of spend on customer acquisition. At some point, that needs to become a little bit more organic, and you need to have a head office cost that is supportable and still generates profit. When you come into our stage, you might invest more in that. We differentiate a lot in the private equity space, and that we allow businesses to go into a J-curve. I don't mind taking profitable business and letting it go into negative territory because I'm investing in talent and technology for scale up. That's sustainability. That needs time. You can't do it in 2-3 years. But we're committed to that time if the founder is in the right mindset.
You need that long-term vision to really make it happen. Absolutely, because too many, I think, go into it thinking they can go into blitzscaling quite soon, too soon into it. But unfortunately, we have run out of time, but in an incredible wealth of knowledge. Ladies and gentlemen, please join me in thanking our speakers, Her Excellency Dalia Khorshid, Amal Dokhan, and Huda Al-Lawati. Thank you so much.
Hello, ladies. Just let me give you small comments about this discussion. If you missed this discussion, please go ahead to YouTube to watch it again, because honestly, this is the best brilliant mind here, and this is three ladies. They are amazing in investment, and read about them, read about the achievements they done. It's amazing to have like Her Excellency Dalia to lead big companies of investment, and also Amal Dokhan to be in 500 startups. It's a global company. It is not easy. Something it's really proud too. And also Huda, she's amazing with Aliph Capital. This is it's role models of the investment. Please make sure to watch the discussion again in YouTube. Thank you.